Hey, what's up? This is DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Tuesday, April 29th. Gonna go through the usual tickers here, beginning with the UVIX, which is the 2x long VIX futures ETF, which closed yesterday at a price of $43.59, being up 1.35% on the day, but pulling back about 1.5% in the pre-market, just below $43 a share. And so, one thing that I did with this chart yesterday is I removed that red box here because I feel like we've kind of moved into a new regime here, being above this downtrending parallel channel here. And I think that we might actually be finding that as support, the top of that channel, in the next few days. And then maybe we start to see a new rally or perhaps just a new bottom start to form here before the next rally. And that will be coming down to right around $39, maybe $40, approximately corresponding with this purple line here that may not seem like too much, but it does look like, there are some pivot points over here, some levels of resistance consolidated right around that level before the big move up. And so I think we could be pulling back down to that level, and that, of course, also corresponding with the top of that parallel channel. And one thing I believe, I did this yesterday, but I wanted to draw it up here during the video, is if I just do a Fibonacci retracement from that low to the top here, we can see a little bit of clutter there. Maybe I'll just adjust the color of that to be light blue or maybe yellow so we can see it a little bit better. But that 786 is right around $45 a share. We did pull back to right around that level. So maybe we could be seeing the bottom being formed soon. But maybe we go a little bit below 40, a little bit below 39. I do have an alert here for myself at $36.90, just having fun with that 69 there. And so I think that could be forming a bottom very, very soon. But it may not. And if I do, these green boxes over here, the red green boxes, they're approximately 2 weeks long. If I do take a measurement from the one over here, that is 13 bars or approximately 3 weeks, because we did have Good Friday in there. And so I really just need like one more trading day after today. So tomorrow, that would be about 3 full weeks, including that shortened week with Good Friday. So, a little bit different now. This is extending a little bit more. But yeah, I think around 40, maybe it would be a good time to enter a short-term, very short-term play on this. And with that being said, I have been short the UVIX, or short the VIX. I'll go over that chart in a second, but I did close it yesterday just because I feel like it's a little bit precarious to be shorting the volatility index with Trump as president, with the tariff wars going on. I think we're probably going to see another spike in the UVIX soon. Also, I think a lot of people are starting to, just be long everything, starting to think that this next rally that we're seeing is going to continue. But I think at that time, we'll probably be seeing a top and then a spike in the volatility indexes. And I just wanted to also point out these levels here. I might just delete this one, at least in the middle, 5109, as we clearly did break below that. And we did get to the lower level here, and we actually closed below it multiple days. That is at 4442, which was the low on let's see, April 9th, when, the markets rallied, but the volatility index came down, putting in this massive bearish engulfing candle. But I will leave up this level here, 64.77. That was the high from April 4th. And so maybe there would be some resistance there, as it was resistance here on the 21st. And to kind of, not make it so many white lines up there, I might just adjust these. This would be red. I think that's going to be resistance. And this, I would say yellow, not necessarily green, because I do think it could be going a little bit lower. And and I also wanted to put up the moving averages just to point out that the 50-day, which is in green, I'm also just going to remove my drawings so we don't have too much clutter up there. The 50-day moving average is in yellow there. That is at 42.98. We did close just above that. Maybe we are starting to see that act as support. So that's another reason why I think it's kind of a risky time to be shorting the VIX. And so that's why I closed that position. Although, this could definitely go lower. I do expect it to go a little bit lower, but I feel like the risk is just getting a little bit too lofty than the reward as far as shorting this goes. But I think it might be time to start building a position in this. But really, I'm just going to be waiting for around 40. So trying to be patient with that. And also, I guess I should just consider, I don't know if I mentioned it, I was thinking it, the MACD here, we do see that being red, and that maybe that could start to turn around as we don't necessarily see the bottoms when it crosses over. The tops are bottoms. We see them, at the inflection point when it starts to get less negative and go up. That's where we see the bottoms. And so I think we could be at a time when it starts to get less negative, starts to turn around and then flip green. That was clearly a time to go long, but really the bottom was before it when this was, more negative, getting less negative over here. And and then so let's real quick just look over at the 10-minute time frame here just to see what happened during market hours yesterday. And so pre-market yesterday just kind of gapped up a little bit, but then pulled back before open. Nice big rally before topping out at around 46.89. Pulling back green on the day, but a pretty notable pullback, holding those levels into the after hours, but then gapping lower. So we'll have to see where this opens up. And then going over to the VIX, which is the market volatility index. From here, we could see that it closed at 25.15 yesterday, being up 1.25%, being similar to what the UVIX did. And I also should note the volume here, forgot to mention it, that over yesterday on the 28th, volume was 4.22 million shares, which was a little bit higher than the past couple days. Volume has actually been increasing slightly with the stock price going lower, but it actually did bounce a little bit. So maybe that's a sign that buyers are starting to step in as far as the volatility index goes. But yeah, I mean, this could be coming down to that level that I have marked here at 23.76, which was the high that we hit following this big move here. So maybe that acts as support in the coming days. Also do have an alert here, I believe, at 24. So maybe we do come down to that, but then also have this alert here at 20. When the VIX is above 20, that's when things are, kind of volatile. And so I'm wondering if price will get near but not completely down to 20 before the next rally up, which, could be, a massive move like we saw over here, or maybe it's just going to be like 10, 20% move to the upside. Either way, though, that's a nice short-term swing. And one thing that I should note, just looking over here at the UVIX, is just the measured move from this yellow line to that red one. What kind of swing is that? So from that yellow line just being approximate up to that, that's a 45% swing. So, at these levels, we're coming down to around 40. I think that could be a really nice time to start accumulating a position for a short-term, 2-week time frame swing for 20% or so, just being kind of conservative, not being too greedy with that level up there for a 45% swing, because, maybe it doesn't get all the way up here like it did before, as like in the past. Last time we had this big move, it took a really long time before we saw a really big move to the upside, and it wasn't as high as it was over here. This thing is always going to be fading lower. That's why they have reverse splits. So good to be keeping that in mind when trading ETFs like this. But then real quick, let's just look over at the SVIX. Yeah, I did trim this actually a little bit lower than what it closed at yesterday, which is a little bit unfortunate, but I just feel like with how I have this doodled here, kind of a lot of lines here. But, I wanted to exit at around 14, marked in yellow there, and my average, I think it's around 1386, or it was around 1386, but I cut losses around 10% loss yesterday. just because I established this position at the wrong time. I established it up here and started building it too aggressively over here. I should have waited for 2 weeks to pass, which would have been, on this low on the 8th of April when we hit a low of $10. So that would have been a great swing for 10 to 20% up to where we're currently at. I didn't do that. And so part of, building that position too aggressively too soon, I've got to pay the price for that. And so I just think it's a really bad time to be shorting the volatility index. If I do want to go long long the markets or short the VIX, I think it's better to actually just go long the SPY, something like that, rather than shorting the VIX because, like the last time we had this big drop, it did not recover all the way. And so with this, I just think, and also, we're at this potential level of resistance right here, which I have based on, these two pivot points over there. And so, maybe this goes a little bit higher. Maybe it goes to 14 up here, but maybe it doesn't. Maybe it gets rejected. And so, I don't think it's worth to get up to break even when it could just be going lower. I'd rather get out at a 10% loss than hope for break even and then get out at a 20% loss, something like that. So not a great trade, but you got to own it when it happens, and that's what I'm trying to do. No big deal. And then now looking over at the SPY, because I'm talking about going potentially, long, although we are getting to resistance here, with this orange uptrend here based on the lows from April 19th and August 5th. We are there along with this, I believe, 1618 Fibonacci retracement from up here. And I should note that the SPY is, of course, the S&P 500 tracking ETF, which closed yesterday at $550.85, effectively being flat on the day, so nothing too incredible there. We do have these levels of resistance here, potentially just above us is kind of this like double top level here at around 558, and then just above that will be a gap fill around 564.50 based on the close from April 2nd. So I do think that there is a little bit more upside potential for this. Gareth Soloway has been talking about if it does get up to this level, that will be a time to short. So maybe I'd be looking to open up a position with SPXU there, or, also, just picking up a position with the UVIX for an in and out swing, something like that. So, I'll kind of evaluate that if we do get up to 564.50. If we fill that gap, maybe look at the SPXU or just, have that UVIX position. So I'll be looking at both of those. But I think that this is getting pretty close to what could be a top. And if we do look here, what makes me a little bit concerned that this is getting rejected here, like I was talking about with the UVIX, the volume actually getting a little bit higher here, maybe suggesting buyers are coming in and this is going to start to go higher. We actually see the exact opposite thing with the SPY. We see a volume progressively getting lower over here, 64 million, over here, 61 million. And then yesterday on Monday, 47.6 million, and we are putting in, maybe that's a Dragonfly Doji, but we don't have the opens and closes right at the top of the trading there, and that looks kind of like a hammer candle or a hanging man candle, which would suggest after a move like this that the top is in. So I think good to be a little bit cautious, and maybe we see a retracement, maybe to fill this gap here around $527, and we can do a Fibonacci retracement here from the lows to the highs there to see if anything makes sense, and that 618 is right around 525.60, so that would correspond with a gap fill there. So maybe we'll want to keep an eye on that. But then we also do have this gap down here. I think I mentioned it yesterday. It's the close from April 21st. Was at a price of 513.88. And yes, there's another gap there to the downside. So we got two of them, but I just got this one marked. And while I got all this stuff up here, I'm just going to throw up the moving averages. Does look like just over our heads is the 50-day moving average in yellow there at 560. And then below us, we have the 21-day moving average at $535. If we do look at, let's see, I thought I had, yeah, these levels up here, the 50% is just below that 21-day moving average at around 531. Yeah, I mean, maybe we don't get there. Maybe we get, some support around that 21-day moving average. And then we have the 200-day moving average in blue up here. That's around 570. That would correspond with this gap fill. So yeah, I mean, I think that we're getting towards, we're at potential resistance here, but if we go higher, we're just getting into a lot more resistance above us, whether it's moving averages, whether it's decreasing volume, whether it's the MACD looking pretty green here, potentially starting to roll over. And we do, though, I'm just going to remove those moving averages. We do have, I might just remove the drawings as well, higher highs being put in with the stock price, corresponding with higher highs in the RSI. So there's no bearish divergence there. Also, we do have higher lows with higher lows in the RSI, so no bullish divergence. But what we can see from this high, actually, so not this one, not on the shorter time frame, but on the longer time frame, we have, even going back to this one, we have lower highs. But then with the RSI, we have lower highs. Wait, actually, no, sorry, not going back to here, but over here, we do have lower highs in the price, the stock price, but we do have higher highs actually in the RSI. And so that is bearish divergence with that weaker volume, the MACD potentially starting to roll over, and this confluence of levels here and more above us. I think that we're probably getting into some pretty big resistance, and this is probably going to start to roll over. But real quick, I'm running out of time here. Just going to look over at the 10-minute time frame. Did get a bounce from 545 yesterday during market hours, then moving up to close right around this 1618 Fibonacci level at 550, then going up in the after hours and holding those moves into the pre-market. Will be very interesting to see where that goes. And then real quick, pretty much all of the same levels corresponding with the SPX or the S&P 500 index closed yesterday at $5,528.75. Got that confluence of levels here, gap to the upside, which does correspond with the double top here, which was more properly tested as support before going higher, more properly tested than the SPY, I should say. And then we do have, gaps to the downside that would be corresponding with a price of around $5,287, whereas the gaps to the upside is around $5,667. So we'll have to see where that takes us. And then here, real quick, looking over at Bitcoin, trading just below $95,000 a share. We do have a CME gap from a couple weeks ago from the Thursday before the Good Friday holiday weekend. That is around $85,000. And so, if we do get a breakdown, I could see 86 being a really nice dip buying level, but maybe we find 89,000 as support, corresponding with the highs over here, kind of wick up to nearly that level. So we'll want to keep an eye on that. But since this does look like we are forming a bull flag, if we do continue higher, maybe that would put a price target around $105,000, or at least getting into the $100,000 range. So we'll have to be looking for that, or maybe, we get just a retest of 89, like I said, before going higher. And then that would, of course, adjust this Fibonacci extension that I have drawn here. I could adjust that level to over here. And that would actually move this level a little bit lower, but we'll, assess that if we do see a pullback to around 89,000. And then also I should note 92 right here, this yellow line, 92,600, corresponding with the dip buying levels from this range that we were trading in over here. And so maybe we do dip to around 92 before the next leg up. And so maybe what I want to do is color this one yellow and then do another doodle to suggest that we only dip to around 92 and then go higher. And so I'll make that one a green. arrow. But that's actually getting a little bit cluttered, so maybe I don't want to do that, but that's kind of the idea. And then Ethereum currently trading above 1800. Don't really have much time to get into this, but it does look like we are above that downtrending parallel, actually downtrending trend channel, not parallel channel. And so that is potentially a bull flag there. The move to the upside would be around $2,000, kind of makes sense. But we do have, this orange line, this orange uptrend just above us, which let's see, where does that correspond with? I think actually I have to go back on the weekly with that. That is based on the lows over here. So yeah, we'll see if that does act as resistance, getting up to, let's see, maybe around $1,900 before getting rejected or breaking out to around 2,000. We'll have to see. And then finally, just going to be looking over at ticker symbol URA, which is the Global X Uranium ETF. Closed yesterday at around $25, up 2.5% or so, a little bit less than that on the day. Up in the pre-market about 1%, around 25.30. Although I do think that we could be seeing some resistance right around there, as that does correspond with the base of this parallel channel. You see the 2 pivot points up here, as well as, a near test of it over here, and here this pivot point on the bottom. Did test it over here before getting rejected below it here. And so might be getting rejected from it there. But maybe we see a move up to around 26. I could see that happening based on this Fibonacci extension here. And then finally, the Boyle chart over here did get a pretty nice move yesterday, up nearly 10% on the day, closing at 53.59 on the day. And I'm not sure where my web browser is, but yeah, it looks like it is on natural gas. We did see this very nice move up here yesterday on the day. Let's see. Yeah, so yesterday on the 28th, it looks like price went up by 6%, but maybe we are starting to top here, as we did have some consolidation here that might be acting as resistance. Also just below that 2024 forecasted average, which we didn't spend most of the year below. But yeah, for me with this, I am just trying to patiently wait for this dip to dip a little bit lower. You can't see it because it's just behind me, but actually I can just move it like this. So now you can see it, that level is around 278. That would be, hey, start to build a long position in nat gas as it does form at bottom, if that does happen. And so a good way to do that is with the 2x leverage Boyle natural gas ETF. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more content like this. Thanks a lot for watching. Have a great Tuesday trading. Take care, you guys.